Good day, everybody. Thanks for joining me in another live stream. I hope everything's working. I hope you see me. I hope you can hear me clearly. This is the earnings report for the fourth quarter of NIO, as well as the full year of 2024 report. I've waited a little bit this time. The earnings have been out since a while, but I took the time not only to go through my Excel sheet, but also until the US is getting up, because usually it's early in the morning, right, if they do it pre-market. So we have almost an hour, but maybe take less than that to go through the earnings report. And then, as always, I will also be live streaming the management call later on. Let me just check the comments here. Let me know if everything is okay. We now have around 100 viewers. Should be filling up. As always, if you are tuning in later, this will be recorded and available on the channel, but everybody tuning in now will be part of the live stream and can comment if you are a subscriber for more than a year. If you're not a subscriber yet, then I would appreciate if you would subscribe, so in the future you can comment here live. And again, just a reminder, after this live stream is finished, I will open another live stream later on to actually comment on the earnings call. Okay. All right. Thanks, Andrea. Seems the stream is okay with the sound. So let's start. So we have this report, which I will go through in a minute and give you my commentary around that, like my personal take on what we got there and how it's relating to my personal estimations. Maybe I'll start with the market estimations. So here's Seeking Alpha, just some headlines. NIO misses Q4 estimates, and the guidance for Q1 are actually below estimates as well. Then another headline. I don't have the subscription right now, but you can read a headline. NIO misses Q4 top line and bottom line estimates, initiates Q1 outlook. If I go into Käufen, you'll see that for example, the next earnings, that's for this, the Q4 quarter, I should say, the estimates have been for the EPS around minus 33 cents. Now, as you have already seen from the headlines, it's been a miss on both the revenues as well as the bottom line. So I'll go into the details in a second. But as always, I will also maybe start with my personal estimations in addition to the market. I mean, as you know, like how the stock has been trading, I think the market has been sniffing this miss out, and we've seen that NIO has been lagging the overall market, even as the Hong Kong Stock Exchange almost is entering a bull market territory, right? NIO is not really going up with the overall market. So clearly, these bad earnings or misses here have been anticipated by the Mr. Market, but I have to say that it's also below my personal expectations. Let me share my screen here with the Excel file as I keep on doing that. Let me check where I have the window. Okay, here we go. Just a quick reminder again for everybody who's now tuning in. This is my brief walkthrough to the NIO earnings report, and then later on, I think we will get much more insight actually from the management call, because there will be lots of explanation to do by the NIO management. But as I said, I just shown you what has been the market sentiment and the market estimates, and NIO, that will be the headlines today, missed on both the top line and the bottom line. What does it mean? The top line is the revenues, and the bottom line is the actual earnings after interest and taxes and stuff, or before interest and taxes. Nonetheless, revenues came in at 2.4 billion roughly. So I have to say my estimates have been already on the low side, I would say, but they have been clearly higher than this actual number. So I had it at 2.7 billion, or yeah. So clearly I have been also a bit more optimistic going into that report. Let me zoom in a little bit that you can see it more clearly. Now that's the revenue side, right? So that's really the top line. Let me jump to the net losses and the EPS, the earnings per share. So Mr. Market was expecting around negative 33 cents. We came in at, I should put a minus before that, actually 43 cents of net losses here for the earnings per share. The net losses come in at 974 million. So that's by far more negative bottom line here than I think even what was consensus out there and what has been my personal estimations. I can quickly walk you through some of the I don't want to bore you with all of the details here, but I want to give you some of the metrics that I was looking at. I thought the vehicle sales margins would be around 13%. They actually got there, actually a little bit higher up there. So that's okay. The gross margins I thought would be around 12%. They're near that, so 11.7%. We look into the details, how that compares to the previous quarters and years, but it's roughly in line, to be honest. But what certainly was a problem here is on the bottom line again. The research and development expenses have been higher, so that's on the right side in black, than what I've expected. So they have been 500 million. And then especially this number comes in huge as a negative here with the SG&A at almost 700 million in comparison to the 500 million that I was expecting. So the total operating expenses have been far worse, and so we get to a net loss which has been quite high, not going into the right direction, right? We need to get to decreasing net losses, but that's not the case. It keeps on being high, and even this quarter even going higher, so that's not good. The only part where I get maybe a nice surprise here is for the cash position. I thought it would go down to 5.4 billion, but it's actually 5.7 billion. We get some explanation with some of the fundings and deals that NIO has been doing there, so that doesn't look too bad, right? But overall, yeah, it's clearly a miss, like the headlines are a suggestion, on both revenue as well as on the bottom line, right? So that's the reality that we have to face, despite the fact, this has been a record-breaking quarter in general, right? So we managed to get the actual expectations of the company guidance, so that's good. But as you can see, the vehicle average sales prices have been dropping very much below my personal expectations. Partly of that has to be explained by that we're now selling more of the Onvo branded vehicles, but also partly maybe some pressure on the pricing of NIO vehicles themselves, right? So using discounts and rebates and stuff like that for selling the cars. And so therefore we get to a very low average sales price. I think it hasn't been that low. And also the SG&A per vehicle sold is actually higher. So that's, they are spending more on sales and marketing per car sold than in some of the previous quarters, and more than I personally expected. So that's the bad news. Partly that can be obviously explained with the launch of Onvo, but let's also look into the report for some clues. Let me see where I have it. This is my my window where I have the report open. As I said before, I think the main insight for today will be actually in the management call, but because in here they largely report what we already knew, right? For example, the vehicle deliveries, we knew that they have been actually very good, right? So this was when they actually really got to their guidance, especially also for Onvo, which is a much discussed topic, right? But it was a record-breaking quarter. So on those numbers, actually quite good. I would also say a positive of this report is that the vehicle margins are staying intact, and the gross margin, I think if we look into the details here, where we see the comments also by the CFO. Where is it? this is now a full year and a quarterly report combined into one. So they are explaining that the margins are better than in the last year of the same quarter, and also better than in the quarter before in 2024. So, on the margin side, at least we're doing well. I think that's a good part for a good thing, considering that they are launching a new model, a new sub-brand like Onvo, where you generally at low volumes would expect a hit to the margins, because obviously, if you're not producing at full capacity, then your margins aren't looking that great. But this tells us that the impact has been limited, and I think they have also been describing that here somewhere in the text, as far as I skimmed through it before launching this live stream. So that's some of the better takeaways here regarding the earnings, which have been a miss on both the top line and the bottom line, due to the impacts, I think, of launching the new Onvo sub-brand here. Now, there have been some interesting pieces in there when I read through it. Let me see if I can find it. For one, there was a other net loss. So this one I would like to highlight, which is composed of 72 million, and that one is due to the loss from revaluation of our overseas renminbi related assets as a result of the depreciation of renminbi against US dollar. So this is a special impact here that we're getting. We won't see this usually in each of the quarters, and we can also see that this has been due to the strong US dollar in the past. As we know that this has already changed the situation, what means already changed, but we know that the Trump administration in general wants a weaker dollar, and maybe that's what we might be getting in the future. And then if the dollar is weaker, obviously the assets of NIO that are RMB dominated will need to appreciate again in those financial reports. Okay, so this has been an impact of 72 million. It's not maybe the main reason why there is a miss, but it's certainly contributing to some of the increased net losses that we are seeing here. So that's, I think, something to highlight here in this report and in those report explanations. And what else? I think what they are describing here also regarding the R&D expenses, which, yes, they have been above my personal expectations, but the R&D expenses, I would say, are still okay in a range where you could expect them. But what's interesting here is that they said there have been decreases regarding other quarters which they're comparing because of the different stages of the development of new products and technologies. So what's interesting here is obviously NIO has been investing a lot into new technologies and new models and new sub-brands, right? And the question is, at which point have we reached the peak, hopefully, of those R&D related expenses? Because it will be much more affordable to make a model trim in between the cycle, a mid-cycle refresh, for example, for the NIO brand now, then bringing out new sub-brands like Onvo or Firefly, right? So at some point, these R&D expenses are peaking. And I think there is suggesting here that we're starting to see that now. And they are also offsetting because of decreased personnel costs, meaning they have really scaled down on their employment in this area as well. Something we've been talking about since a couple of quarters already, right? But so far, these effects, I think, are still overshadowed by the fact that we are currently in the periods in which those new models are getting launched, right? You see that especially with the SG&A, where I said that this has been one of those big negative surprises here. Both if you look at the KPI in terms of how much money they spend per vehicle sold, but also on the absolute number here of those 670 million that it has cost. They say that obviously that this has been due to these increased sales and marketing activities for new brands and products. Okay. Now the question is like how much will this continue going forward? Onvo is now active since a couple of months, and parts of that might be already in the books. Of course, like building out the stores and stuff like that is all going into that, right? And at some point, these hopefully will incrementally be outweighed by the actual growth in volumes. In the first quarters of a launch, you're not expected to get that, but in the future you will. But then obviously we also have Firefly coming up in these quarters. So Q1 and Q2 might still be impacted by those launches of new brands and products and those abnormally higher SG&A expenses, as well as possibly some research and development expenses. So that's the unfortunate truth that we are learning through these reports here, between those, differences in miss of expectations versus reality in this sense. So this is, some of those explanations that we're getting here in the earnings report regarding these numbers that we are presented with today. I think there will be much more that we can learn from it in the actual earnings call, because there will be tough questions around the expectations that management has set, not for this Q4 report, because they were actually on point with the numbers. So that's something they managed to achieve, which we also shouldn't forget. But of course, there is this 20K Onvo projection for Q1 2025 still on the table, and they haven't given a fully official explanation to that. So that will be what everybody's looking at in the quarter earnings call, and that's the outlook, right? For the outlook, we get, I should mention that, 41K to 43K, which is hinting that there will be at a similar monthly delivery than what we have seen in the last 2 months, right? And that will bring us to a number in total, the 41, 43K, which is far below the expectations, as has been mentioned here with this Seeking Alpha article here and this headline. So that's where we are, right? Unfortunately, that's the truth of this report. And so, we do have substantial improvements here, I would say, in the cash balance, but that doesn't outweigh those unfortunate numbers on the bottom line. While the top line is mostly okay, especially with the margin side. I think given that the margins have been stable now, potentially we see them even improving into the next quarters. That would be the positive outlook, if you will. But definitely we've heard, management, Li Bin and so on, talking about cost cuts and those new initiatives on, regulating the return on investments for their R&D expenses and stuff like that, which is a clear response to what we see in this report today. Okay, and as I said, like the market has been sniffing that out, while the EPS average expectations have been actually even a bit better, or actually far better, at 33 cents, but now coming in even worse than that. So the way that the stock has been trading, it's definitely been no surprise to the wider market, but that's what it is. Maybe there have been some more details here also on stock-based compensations that are dragging down the overall net loss and the earnings per share, that sort of stuff. There are all explained in here, but if you're just looking at the simple stuff out there, it's it's clear that this is currently not sustainable the way it is. So this, in combination with the missed expectations into Q1, is definitely the problem for NIO management right now to explain, and how they are thinking that they can turn around the situation, right? So this is the situation of this report. Clearly a miss on both top and bottom line. Also a miss in my personal estimations. Some subtle highlights here when it comes to the margins, and then lots of bad surprises when it comes to the actual expenses, right, in the area of R&D as well as SG&A, both impacted mainly due to the launch of the new sub-brands, which are unfortunately going forward in the outlook not giving us a strong picture. So that's the situation with this report, and we now have half an hour until which the management will face the questions by the analysts. I hope there will be some good analyst questions in there, and where they need to get answers and provide answers, how they want to turn around the outlook there, because certainly it cannot continue like that. I mean, that's very obvious. I've been looking for a decrease in the net losses since about 2 quarters now, and it's never come. It's actually getting worse in this quarter. So that's certainly not the way forward. I have to say, obviously, Q4 is also where you get the highest numbers, not only in revenues but also in spending. That's one of the truth. So Q1 might see lower capital expenditures as well. We've seen the company taking measures with raising new funds, bringing in new partners, and so on. But we're still missing some answers regarding, for example, payments by 4/7, payments because of possible carbon credit sales, and then obviously the real improvements on the volumes, right, which they have also guided towards, not only for Q1, but actually for the full year 2025. So that's what we need as the clarity going forward. Let me now see some of your questions, whether or not there are questions in there. Can't see any questions as of right now. Yeah, here's one question by Andrea. Thanks for this. Why are consumers not liking the L60 so far? I can only tell you my personal views on that. As I mentioned before, I was not that excited about Onvo, to be honest. I may have been a little bit conservative with that. But when I noticed the car, or actually got my hands on the car in China, I was more positively surprised by how good the car is as a package. So that's my personal view on the actual product. And I don't think that actually the consumers are not liking the L60. I think it's a strategic problem that NIO has chosen to launch it as a standalone brand, which nobody knows. So you have to be aware that not everybody even knows about NIO in China, and let alone about Onvo, right? But they made the decision to launch Onvo as a sub-brand. So this, in combination with some of the issues about marketing the product, which I pointed out, for example, why they're not advertising the price even more, why they're not advertising battery swapping as a USP more, why don't they, make the brand connection even more evident. That stuff hasn't happened. I think there is simply a lack of awareness. That's where it comes down to. And, this is something that can be changed, but needs a better strategy, frankly. And if they manage to do that, then I think people will be happy with the product, and the product is good. Right. So here's another question. Would you consider reallocation of your portfolio based on the report and future outlook? Tough question. So I haven't allocated my NIO position, to be honest. I still trust the management and the vision and the company going forward. I think there's huge potential in NIO going up, but it's clear that the company has underperformed and the stock has underperformed. So I'm certainly not happy with the stock price, that's for sure. But unfortunately, that's the nature with investing into a venture, a startup, a big vision and idea like NIO is. But yeah, will I make adjustments? I can't say like this in ad hoc. I don't see right now that there isn't a way of turning it around, right? I think there is a path forward. Maybe we'll see some answers in the earnings call, which are sufficient already. But no, I stay invested. I'm invested in NIO for the hopeful, positive case, the optimistic case that they'll turn around. And then I think it's a very undervalued company. I mean, I'm in a different position possibly than you are. As you know, my average is okay. I'm not in a lost position right now, so I have this option. But so I cannot tell you what you should do. I can only talk about my current outlook and my position. And yeah, so far I'm fine with that, and will keep holding my stock. And maybe in the short-term portfolio, so I have one portfolio which I basically don't touch, which I have this very nice average because I invested when everybody thought NIO would go bankrupt in 2019. And then I also have a short-term portfolio in which I do a bit more trading, you know, where I do try to time the market, which I generally advise against. But yeah, I'm also doing that sometimes. Can ET9 and its tech make a substantial impact? Well, ET9, almost forgot about that. Yeah, should hopefully also provide some very good earnings potential. So far, I think it's been received with lots of respect and praise by journalists and people out there. I have to say, I want to be honest here, it's not a car that I would personally buy, right? So I'm not the target group of ET9, so I'm not overly excited about the product as a product itself that I would personally want to get. I'm much more excited about Firefly, for example. I think especially in Europe would be a very nice product to have and drive myself. So I'm more positively optimistic about Firefly than the ET9. But on the financial side, I mean, with this high price tag and with all of the tech inside and so on, there is no doubt about it that this will be an important product for NIO and could be part of this turnaround story in terms also for the financials and stuff, right? Because you make just a big, I mean, selling, I cannot quantify it right now, but selling an ET9 is as good as selling a couple of Onvos, right? So we've seen the Onvo lower price tag is now also feeding into this lower average sales price of NIO in general, because obviously we're now going into those mass market volumes, and then definitely you earn less in an absolute amount on an Onvo than you earn on a NIO car, and especially on the ET9, right? So yeah, it's good that they have this ET9, especially also as a brand anchor and so on. To be honest, I'm regarding NIO as a brand, I think it's a success story, okay? Also with the numbers and the branding and the growth and so on. We don't want to forget that they have 40% year-over-year growth metrics, okay? A Tesla, for example, is not growing in comparison, and NIO is higher as for the NIO branded cars in the average sales prices, right? But we definitely see NIO struggles with the launch of the Onvo cars, okay? That's what's not satisfactory right now. And it doesn't help the earnings so far. That's the problem. Right, let me see if there's some more questions in here. And then again, in 30 minutes, we'll have the earnings call. This will be the most important part. Can we expect an update on the F3 factory completion in the earnings call? Good question. I was barely tracking that, but yeah, there might be some actual news around that. What's James talking here? The upgrade to the NT 3.0 platform will be a game changer. I've said for ages that although it's on a small thing, the vertical screens have held them back. Okay, interesting take. I mean, it's definitely good that they are having new models coming out for the NIO brand and that the technology, the under the hood technology is changing. Might be one part of what's currently impacting all of the R&D resources and what we are seeing mentioned in the report here. Still, no excuses here. That's still far more than what the market and I myself have actually anticipated, right? So another question here by Gavin. If they plan to be being profitable and increased losses is concerning at this point. Thoughts? Yeah, I mean, they have guided for profitability in this year. So one profitable, not for the entire year, for one quarter in Q4. I think it's actually possible. I actually have it also in my personal estimations. So I wouldn't take this Q4 of last year report and take this as an indication of what's possible in 2025. I think there's a lot then that can be changed and can be done, okay? I actually think even if they are not going to get the projections for 2025 at the top line, still they could manage to get a profitable quarter in Q4. So, yeah, but on the other hand, the continued net loss increases, they need to stop, right? We need to have the change in trajectory there. So here's another question. Why did NIO make new sub-brands? Yeah, good question. They could have also run everything under the NIO umbrella. I think it's possibly a positioning type of thing, and then the vision and idea to kind of turn NIO into almost a conglomerate like Toyota or Volkswagen, where you have the Lexus brand or the Audi brand inside of this bigger group, and then you have sub-brand, which in the long run makes it more easy to make the brands distinct and market them to different audiences, but it doesn't help in the short term, as you can see clearly if we compare it to XPeng, who, for example, launched Mona, also sort of a sub-brand just within their own XPeng stores right now, right? So it's much more easy for them to market it, while the challenge with Onvo is a new store system, new even operational system, new marketing, new branding, everything basically starting at zero. That's the challenge. Right. Again, thanks for more than 400 people joining. That's just a quick reminder again that this is the live stream about the NIO earnings report. It's available as a recording to everyone who's just waking up in the US, for example, and joins us later. I really appreciate that you are watching live, and those who are joining later. Those who are watching live can add comments now if they are subscribed for more than a year. If you're not subscribed yet, I would appreciate if you do that now, so in the future you can comment. And after this live stream, I'll open another live stream in which I will be talking more or commenting more on the actual earnings management call with the analysts and so on, which I think will be a bit more insightful into newness and explanation of this earning report. In this video so far, I've gone through the market expectations as well as my personal expectations and how they could compare to the actual report, as well as some of the insights and takeaways here. So far, takeaway is, yes, this has been a miss on the top line and bottom line. Mostly impacted, I think, by the launch of the sub-brand, which has caused higher net losses, higher capital expenditures, and so on. And that in combination with a poor outlook for Q1 is what I think has caused the stock trading sideways or not really following the new China bull market so far. We need really good explanations going forward by the NIO management and actual changes in the numbers also on the ground, right? So we'll see how they respond to that. Let me close off with some more questions if they're in here in the comment section before I'll end this live stream and hop over to the other one, which will start in around about 20 minutes, okay, the earnings call, so stay tuned for that. Here's another question. Has NIO actually achieved any guidance that they have given in the past? Well, Elias, yes, they have actually achieved the guidance of this report that we've just been talking through. When it comes to the delivery numbers, both for the Onvo as well as for the NIO brand and the group, they have the guidance has been met. So this has not been a problem with this report. Here's a comment by Xiaomi is killing NIO sales with more exciting design and tech, or with no swap. Yeah, interesting comment. I have to be honest, I'm not a fan of the Xiaomi car, the SU7, and also not the SUV, which they will bring out. When I saw the Xiaomi SU7 in person in China, I was surprised by the poor quality of the exterior design and the materials used and such. But that's my personal takeaway. Again, that that's not worth an analysis on how well the product will be doing, because obviously the product has been extremely successful, both on the consumer side, but also on the financial side. So Xiaomi has taken away sales by NIO, that's clear. And the product has been a huge success. I just think it doesn't have its own brand identity, really. It's it's looking like a Porsche Taycan, and the next one will look like a Ferrari. And but it's it's getting people what they want. They want a sleek, nice-looking sports car full of tech that it's at 1/3 of the cost of a German car. So that's what Xiaomi delivers, and they managed to scale it up and big. So yes, it's definitely hurt NIO, and job well done. Still doesn't make me a fan of the Xiaomi approach, and we'll see in the long run if that's sustainable or not, right? Do you think ET9 and refresh could ignite the sales? Good question, Daniel. I think for the ET9, we have a good order backlog, and going forward, I wouldn't suggest this, expect this to become one of the main sales drivers of NIO. Okay, that's not the case. I think the importance of the ET9 is its technology, which will trickle down into other models. Plus, it will establish a new anchor point for branding and brand awareness, and the NIO brand in general. So that's the importance of the ET9. But then also the refresh of the other models will be, I think, important for the sales overall. I think we do see right now some sluggishness in NIO sales regarding the transition from older to the new models. So yeah, I hope they manage the transition well. That being said, I expect starting with Q2 to end of Q2, 3 and 4, that NIO will start selling better again with the upgrades. Okay, there's a question. I'm actually planning a video on that. That's not a question, but a comment by Pepich. Do you think BYD fast charging system is killing NIO now because they have swap? No, I don't think that this fast charging system is killing battery swapping. Again, I'll do a separate video on that, but there is not a real danger to the battery swap system based on supercharging getting faster, in my opinion. First of all, I see lots of operational and real-world problems with that super fast charging system, because for one, it doesn't exist as of now, while NIO has almost 4,000 battery swap stations already existing today, and it's still faster than this fastest battery supercharging system, right? So let's wait 5 years until they have built it out, if they manage to build it out, if they actually follow through. We have seen lots of announcements like that in the past, for example, with the Li Auto Mega. Now they are scaling back their build-out plans for the Li Auto Mega superchargers, and they're not as fast as the BYD superchargers. Plus, it's an unknown whether or not it drains the battery as much and whether or not it's actually operational in terms of, do you get this peak power actually when you go to a stall, or will it be cut in half if another BYD next to you is charging at that point? Whereas for battery swapping, you get all of the benefits despite the fast power replenishment. The power replenishment is just a given. You get that at 3 minutes always. So this is standardized. This will not be less. You can book your ticket in advance. You know how many people are in the queue and so on. And it has many more benefits on top of that, right? When it comes to battery health, upgradability, technology, and sort of things, the grid balancing on top. And I would actually even doubt that the BYD superchargers, with that, they need additional energy packs at the supercharger to actually provide a load there. So I would even question that it's cheaper than a battery swap station on top of that. So many question marks around that new technology, but I don't think it'll impact NIO swapping. What's the one question you would ask Li Bin? Andrea, man, that's a tough question. Really, really tough question. Yeah, I would ask him, and possibly he will get that question today, like how is he looking to improve operations, especially on the marketing side, right? What's the plan there? Tell us. Because so far that's not a success. At least for the Onvo brand, I'm not going down that rabbit hole and say the NIO brand marketing is not a success, because I actually think, as I said before, NIO itself has been a success when it comes to the numbers, given all of the macro environment with the fact like how the Chinese economy, the competition and all of that. I think NIO is a huge success. What's the advice? Well, I'm just an armchair analyst here, so I'm not saying I know exactly what to do, but I've taken some advices in videos that I made in the past, especially when it comes to Onvo, right? I was saying there needs to be more of a guerrilla marketing approach where you go into the suburbs and you make bolder claims like free energy due to battery swapping that can subsidize sales in terms of the grid balancing revenues and other revenues, and the partnership revenues can actually help to subsidize NIO cars to make them more affordable, something that the competition doesn't have. So that needs to become more clear. Talk more about the profitability of the swapping and other services business, which, by the way, I think we're very close to that in the other sales. So that's something I did not mention here, but I think the other sales was looking almost break even, if I remember this correctly. So maybe finish off with this positive point here around this earnings report. But that's something that I would like to do and see. I think Li Bin made mistakes when it comes to hiring or overseeing some of those hirings that have possibly been made in periods where capital was abundant, things were going well and stuff like that. It's natural to make those mistakes, but they have possibly been corrected too late. So that's why we see still talk about those cuts being made and the improvements that are being promised for the future, that sort of stuff. So yeah, that's the main topic. Okay, last question that I'm taking by Alan, and then I want to end the stream here because I already took almost 45 minutes, and it's available as a recording. I don't want to make it too long for the report part, and then I want to really cover also the earnings call live again. So is there a battery infrastructure war between BYD and CATL? It seems like they are both backing different battery charge systems. That's a good one, Alan. That's a really interesting one, almost a bit conspiracy type of thing, and I like that type of questioning what's going on there. We know about how really BYD blade battery availability has impacted Onvo, and now partnering with CATL. I mean, you couldn't make this up, right? It seems like NIO is orienting more towards CATL, and BYD is not weighing in there, whether it's coming to battery swapping or to supporting new brand launches like Onvo. So yeah, you might be onto something there. Good one. All right, guys, I think that's it for now for the report. Much more insights possibly in the earnings call. I'll make, be sure to refresh your YouTube page and be subscribed. I'll now make the live stream for the management call online. Be sure to catch me there in 15 minutes. Thanks, everybody.